Well, as China appears to be feeling the sting of the ongoing trade war, the country's producer price index dropped by 0.8% in August, following a 0.3% drop in July. So let's talk a little bit about this. What's also fascinating to me is that these are the official government figures, right? And if they look that bad, is the reality,
what's really
even worse?
Yeah, because you would expect them to pad the numbers a little bit, and I think you're probably seeing some effect from trade that's material. I mean, look at the import-export data. Chinese imports fell by a pretty significant amount, so you're seeing internal demand within China actually start to deteriorate. So the big question is it enough to bring the Chinese to the table? Is it enough to bring Trump to the table and have some sort of accord? I highly doubt you're going to see some big deal between those two countries, but I don't know that that's what the market needs right now. I think the market needs a de-escalation, some evidence that we're not going to see tariffs balloon out of control. I don't think the market expects a deal right now. I think what the market wants is some sort of de-escalation. I do think that is possible.
You think we'll avoid the October 1st tariff increases?
It's so hard to know, to be honest with you, but this is what I think, and maybe I'm being too optimistic, but I have a really hard time believing that the president wants to do things that's going to torpedo the market and the economy heading into an election year. I know that maybe that's a little bit Pollyanna. Again, maybe I'm being too optimistic, but I've said it time and time again. I think that there's enough motivation there. There's that self-preservation mechanism that kicks in, especially for someone who wants to be reelected president, that they will be willing to make some sort of compromise. And perhaps the pain that China is starting to feel is now enough to bring them to the table as well.
Maybe.
Well, there's another way of looking at it, which is, I mean, a lot of people didn't think Trump would let those September 1st tariffs go into effect, and he did. In fact, he even raised those tariffs from the initial starting point of 10%, and he made them 15% because he got pissed off that one day. So I think there's a pretty good case that the October 1st tariffs go into effect. And then the big question is, what about the December 15 tariffs? And I think that I think it gets hard to see a way out of this. Yes, the Chinese economy is hurting, but that is not going to be the thing that gets China to give in. China will give in when President Trump gives them an opportunity to say, "We won." President Xi Jinping needs to be able to tell his constituents, "I won. I got something out of this trade war." And if Trump just keeps approaching this as a thing he has to win and the other guy has to lose, there won't be a deal.
I want to come back to something that we talked about yesterday, which is the so-called Volfefe index. I don't know if you saw this, Jeff. Basically,
with the tweets.
Yeah, basically JP Morgan tried
something
to
that
measure,
we all already knew,
right,
but it does measure
but
it.
that's my question, you know, especially as someone who is probably a little bit more long-term in your planning. How do you trade around that? Do you trade around that? Do you try to ignore it to a certain degree? And how do you apply any degree of rationality to a situation that from afar does not appear rational?
This will probably be a boring answer, but you can't predict these things. I mean, this is inherently behavioral, and you don't know from any given hour whether a tweet is going to come out or not. So you cannot build a portfolio or you cannot trade around these tweets. At least from my perspective, it's basically impossible. So I think what you can do from an asset allocation standpoint, and here's the boring part, it's be diversified, have exposure in a lot of different places, perhaps lean a bit defensive here, as I think volatility probably remains elevated, but that's what you do, and you don't panic. I think, you see a 5% sell-off, you see a 10% sell-off, people's inclination, given everything going on in the world, is to think, okay, this is the beginning of the end again. I think we saw it at the end of last year, and I think it's possible that we see it again. We don't think that it's the beginning of the end. We think it will be more kind of incremental interim volatility. So for our clients, we're saying, look, this is why we build your portfolios the way that we do, and we don't think we're heading into a recession. So for now, stick with the plan.
You know that line, you can't time the market, you can't time the tweets.
No, that may be even harder.